This is Eric Muathe with Muathe.com. I haven't had an opportunity of discussing the opposite of RSI 69.1, which is RSI 30.9. And if you're new to these numbers are my own researched numbers, but you can see the market over the span of technical analysis had a little bit of a view about those levels. You can see traditionally the RSI is going to be at 70 and it's also set at 30. I can assure you that it is actually, factually, I can prove it, 69.1 and 30.9 respectively is what these levels are aiming for. Now, you hear me talking about RSI 69.1, and yes, we've been in a bull market, so you hear this number a lot. But the opposite number is RSI 30.9, which is a momentum bearish number in the following sense. Whenever you clip below 30.9 and stay below it, like we did here, you're going to see momentum pick up with a large expanded move to the downside. In other words, it's not an area to go looking for so-called oversold stocks, because this is where they actually gain momentum to the downside. Here we can see at about $9 all the way to the lows here of 3, while the RSI was trading below this very destructive level below 30.9. In other words, be very careful when you are owning an instrument that is trading below RSI 30.9. And if you do a little digging, you'll see that prices don't recover until after you move above that level, the 30.9 level. Now, coming into 2020, you can see here that GameStop was trading at RSI at about 33. Now, the risk is whenever you go back below 30.9, after spending some considerable amount of time below 30.9, that is almost a death sentence. You don't want to go back below 30.9 again, because it means more than likely you're going to make fresh lows below the previous closing lows. So in other words, the previous monthly closing lows more than likely are going to be taken out if the RSI drops back below 30.9. So this is at the end of 2019, where the RSI began the year at 33.38. All right, so let's fast forward here to sometime in January, and this is now January 14th of 2020. You can see that now the RSI had dropped below 30.9. And because of that drop, and as a consequence of that drop, you can see here down about 22% middle of the month, and we can see now with live trading that the stock is now struggling, down about 35% so far this month. So again, we understand that as long as the RSI is below 30.9, the risk is actually not for a bounce, but the risk is actually that this instrument ends up trading to fresh lows. And already we are seeing it break below the previous monthly closing low. And there's something else also we can add here. Take a look at where the RSI broke down. Remember, all this plays out as a dance. RSI broke down here in the beginning part of 2019. And that was at about 11. And over the last couple of months, there was an attempt to move above this line. But you'll notice, based on my uniformity method, links are going to be in the description, that this is where it stalled. And if you understood what to look for, you would have known that that was not a good place to hold, because once resistance was confirmed there at about 650, you knew that there was a high probability of drifting back below RSI 30.9, and that is exactly what has happened. The more it stays below 30.9, the more you can expect this to trade at substantially lower prices. The only way it can recover is by reclaiming the 30.9 threshold. if there's gonna be any recovery in price. This is Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. ECS.